Hey, what's going on, YouTube? This is Aaron Yoon coming at you from New Jersey today. First, I want to say Happy Father's Day to all the dads out there. I hope everybody is being safe and healthy. If you were getting together with family to celebrate Father's Day, I know that I was here over in New Jersey, where my parents are, and I'm still here due to a set of unforeseen circumstances, nothing bad or anything. We just decided to stay a couple extra days here in Jersey. And look at that, the market just opened up again, indicating me to stop talking about myself and talk about the trades today. So today was the start. Today's Monday, and it's this, we're starting off a week here with the S&P rallying pretty good today. And I have to be honest with you guys, I did tell you that I would do a daily breakout trade. And if I'm being completely honest, I missed out on this. I was a little bit outside of my rhythm. Again, part of that being that I was not in front of my usual trading computer. I was here on my laptop, and I wasn't really paying attention. And I missed out. And on top of that, when I realized I missed out, so let's just be super clear about what I missed out on. So here's the 9:30 candle. And again, the system is if it breaks above the high of this candle, as it did almost immediately, then we hold on to it and hold on to it basically for the rest of the day. And that would have given me a really, not a monstrous move, but definitely definitely a winning day. It would have given me what? I don't want to spend too much time on the coulda, woulda, shoulda, but it's definitely a part of the mental game. So assuming that I went from 85 to, and I held it for the day, I didn't quite hit 115. It would have been like 30 points. Is my math right on that? Okay, yeah. So 30 points. Nothing astronomical. That's like a 30-point move on one micro contract is maybe, what is that? $150. Not bad. If you can stack a couple of contracts on that, definitely a winning day. But I missed it, and so this vlog is less about trading strategies and systems. It's more about mental and emotional gain. And as if you're going to be a day trader, then I think as a day, well, I'm not committed to being a day trader myself. I'm still experimenting with what time frame works for me. And to be quite honest, day trading every day does feel like a little bit of a job because I have to show up to it at 9:30 every day to take these trades. I work a lot less, and I think it's a lot more fulfilling and fun than your typical 9-to-5 job. But nevertheless, I don't know about the risk reward the cost benefit ratio, I should say, of showing up every day and having to and what I get out of it. So obviously, you can tell here I am not trading obscene amounts of money. I'm still learning. This is a vlog for me as a new and learning up and coming trader. For everyone else out there that is also a new and up and coming trader, what I believe to be the most important part of the game, and it's the part of the game that no one else is really talking about, is how you feel throughout the day, every day as you trade. So if anything, for me, my commitment to day trading isn't to be a successful day trader. It's more to show up and practice my mental and emotional game on a daily basis. I hope that makes sense, because there is a pretty big difference there. Whereas it's kind of like if somebody was to say, I'm not. Like ideally, in terms of physical fitness, I should hit the gym 3 times a week, maybe 4. But I'm gonna practice. The emphasis on the word practice. I'm gonna practice working out 7 days a week, not because it's healthy, but because I want to get into the rhythm of doing something 7 days a week, not skipping a single day. right? And you could do the same thing with your eating habits, your sleeping habits. I'm gonna count my calories every single day, even though I don't personally buy into counting every single calorie you eat. Like I feel like that's a little bit too much for me. But if that makes you happy, go for it. But so for me, the point of this is, I think we lose ourselves in it in intention sometimes. My intention with this entire vlog isn't to necessarily become a successful day trader, but to practice the discipline emotionally and mentally that doing something on a daily basis automatically brings to the table. Hopefully that makes sense. Anyway, let's get into the actual system here. So this was the system being, break above the high of this candle right here. I would have had, if I missed this, I would have had a second chance. But here's the part where I'm kicking myself. See, I broke my own rule and I didn't really stick to the system, and I ended up regretting it because I saw you see this green line I have here and this red line I have here? I have these lines marked off at every quarter, and that a quarter meaning 25 points. And to me, there's something to be said about every, not just every 25 points, but psychologically easy to recognize numbers. So like a price like this, where if it was like 64.25, that's an awfully specific number. It doesn't actually resonate with me as a clear round number. As a human being, we like even numbers, which is why for me every 100 is a red line, because that's like a bigger, more recognizable. 3,100 is a nice round psychological number that I think that will bring in a lot of buyers or sellers depending on the trend. 3075, not quite as strong as a nice round number, like with one that ends in zeros, but anything that ends in a multiple of a quarter also indicates strong psychological bias. And this isn't me making this up. I just happen to have been trained a little bit on the quarters theory. So you can pick up books on the quarters theory. It works better in currencies, but I think that it does apply in futures as well because of the tick value. It goes up by every quarter. So I think there's something to be said there. So I'm experimenting with that a little bit. And so all that being said, I put in a buy order at 30.75, thinking, you know what, I'm gonna try and squeeze out a few extra points here. I think this is a safer buy area because of the psychological effect of the price ending in 75 even, 75.00. Now, in retrospect, in hindsight, hindsight being 2020, I was totally wrong. It had like not even a near miss. It just missed kind of completely. What was the low here? The low was 30. If you look here, the low says 30.77.25. So I was a good 2.5 points off, right? And that's enough. That's not enough to call it a pretty even that close. I think I had the right idea that I wanted to be a buyer and I wanted to get the best price possible. But sometimes if you try to squeeze too many points out of things, you just get nothing. And that's what today was like today. That's what today's trade was like. And I missed it, and I was really kind of annoyed. And I was like, come on, it'll come back down. It'll come back down. And I found myself smoking some of that hopium, right? And mentally, that's not a good place to be. I know whenever that I get kind of hooked on the hopium, I don't want to make too many, drug puns or addiction puns. But I was definitely smoking the hopium at this point, hoping that it will come down and just touch my 30.75 price, get me in the trade, and then rally back up instead of doing what it actually did, which is just rallying up anyway. So, I should have had more conviction in my system, in my commitment to do this. And I'm starting off the week with breaking my own rule, and so I don't know what that's really about mentally. What caused me to do that? I'm not really sure. I just know that it happened, and so it's something to reflect on and meditate on. And so that you can see the tip of the day today at the bottom of the screen is you can beat fear and regret with conviction and confidence. And the only way to really cultivate conviction and confidence is to do something on a consistent basis. And even though I don't plan on being a day trader long term, because statistically it's just not as likely, and you get lower probability trades if you try to force something on a daily basis, I am committed to being a day trader because I'm finding that it's the best way for me to practice my emotional and mental game on a daily basis. So here's a couple other things that's the tip of the day today. And so I think we can take that off of the screen now, because I do want to share some other things that I'm noticing. And whoops, that's not it. There we go. All right. So now that that's out of the way, I do want to share something that I am noticing here that is a little bit of a cause for concern. Is I'm noticing on the smaller time frame, the 15-minute time frame, I think I'm getting a little bit of divergence here. Yeah, I am. So so when I'm talking about divergence, what I mean is negative divergence. What I mean by that is we had price hit a higher high, but price also then hit on, oh, excuse me, the RSI hit a lower RSI. So whenever these go in two separate directions, that is a warning sign that price might start to go in a different direction than it has been. Same thing kind of happened right here from this high. Not to mention, I'm getting a lot of signals right now that this trend might be over. So let's see here. The RSI here is 65.54, and here is 37 again. So the price is going up, but the RSI is going down, right? You can't really. It might not be very obvious to see unless I do it like that. That might be a little bit more obvious, but I don't want to take up that much real estate. So this might look like on your screens more or less a straight line, but you can tell by the value that for this, the high of this is 66, and the high here is 65, and here is 64. So it's like going down by a point or two, whereas here prices are making bigger highs or new highs, right? Higher highs, I should say. I don't know. I can't talk today. But what's also concerning to me is this kind of like tweezer effect that we see here. If you can notice that that the high price here and the high price here, they're same, 3107 here and here for both these candles. You can see same thing. I'm noticing here and here, right? 3109.50. And because this is a 15-minute time frame, I'm taking those indicators with a grain of salt. But what I don't like is that I'm getting so much of it. And if I look on the larger time frame, the hourly time frame, which is where I mark trend for this, you can see that it's not really as big of a problem here. Here the RSI isn't showing divergence, and this is where I will say, well, this one, you got the double the tweezer effect here, and you got the tweezer effect here, and yeah, so it does present a little bit of a concern, but it actually didn't break. There's a lot. Look at these long wicks that on the bottom of the candle, which indicates a nice strong buying pressure, even if it did show these kind of warning signs. So I think that there's momentum is dying down, but I am not entirely sure that it's dead yet. So here's a neat little trick that I picked up on I'm not going to tell you where I picked it up from, but it's from one of my instructors who's a world-renowned CMT, which stands for Chartered Market Technician. If you don't know what that is, basically it's a master's degree in charts. You can just think of it that way, right? That's the simplest way that I can summarize that in one sentence. So I am following someone who is a CMT. Very, very technical guy, and he leaves very, very little room for emotion to get in the way, which for me seems to work with my whole conviction and confidence thing. You know, the tip of the day today, once again, is to beat fear and regret with conviction and confidence. And fear and regret is the number 1 and 2 enemies of trading and doing well in this craft and in this business. So for me, if it's mathematical, that means that it's very easy for me, or easier, I should say. It's easier for me to follow something because math said so. And then it's easier for me to be okay if that math happens to be wrong and actually turns into a losing trade. It's a lot harder for me to justify my own instincts, because then I get into the whole gamut of, like, you know, I coulda, woulda, shoulda done this, and my instinct is easier to second guess. Whereas math, it was just like, you know, it's just math. It just that the probability didn't happen to work out this way. But if you do it hundreds and thousands of times, you know, you have that, you know, 70% or 80% probability. So it's just the numbers game at that point. It's a lot easier for me personally to get into that. But I know that other people who are not technical oriented, who hate numbers but still want to trade for some reason, I don't know why, and they want to trade on instinct and feel and just, you know, just experience and just pure fundamentals, betting heavy on what they know. That is a different kind of trader than what I am, and not saying that that's good or bad. It's just that I think everybody's different. You know, not every football player is a quarterback. You know, there's only one or maybe two quarterbacks if there's a backup, and there's many others of other positions, right? There's a lot more offensive and defensive linemen, and, you know, there's a lot more receivers and, you know, et cetera, right? So not everybody gets to play quarterback, even though they tend to get all of the glory. I am not, I guess, I'm not necessarily one of those people who have really great instinct and a really good just feel intrinsically for the market. I like to have math support my decisions, at least for now. So that all that being said, I am a little bit worried. I'm a little bit anxious because all those signs. But I'm also all that is kind of counteracted by the long wicks on the bottom and of these candles, even on the hourly time frame. And so anyway, the trick that I picked up from the CMT is that it's a trailing stop method, which right now with my free package in TradingView, which is what I'm using here today, I don't think maybe I just don't know how, but I don't know. As of right now, as far as I know, there's not a way to set up a dynamic trailing stop based on an indicator in TradingView. If I'm wrong, then, well, I'll find out. I'm gonna take a look. And the idea here is that once it closes below the green indicator line, which is just the 8-period exponential moving average, that's the green line, then I'm going to close the trade out. So basically, at this point, it's moves the stop to break even. And if it closes below, okay, I'm going to modify that, confirm that trade. You just saw me do that. If it confirms, if it closes below the green line, then I am done. I'm out of the trade. If it actually touches the yellow line, then I am also done and out of the trade. So if this ends up turning around, I am going to at the very least lose no money on the trade, and overall I'll just have lost like $1.25 or 50, whatever it is per contract. I don't even remember anymore. Whatever the price per contract is to trade, whatever the commission may be. I hope it doesn't do that. Obviously, I wanted to hit the next quarter, but we just don't know. We're in the overnight session now, almost, or we will be soon. Right now it's 4:50 p.m. Eastern. We will be entering into the Globex trading hours soon, and then going into the overnight. Hopefully, this momentum continues and hits my profit. But at the very least, I've broken even for the day. So I don't really have a record for today yet because nothing is realized. I only want to count the trades that have been realized, and I haven't realized anything today. I really wish I had followed my own system about the breakout trade and taken it from the beginning of the move, but I took a gamble pretty much, and I took a shot at taking the psychological 30.75 price, and it didn't really work out. I ended up missing this move, but I mean, not going to beat myself up too much about it. It wasn't really much of a big move day anyway. Although the other thing is yesterday I watched the market open and it actually had some bullish pressure up, and I hesitated. Again, like it was Father's Day, I wasn't paying attention, and I was like, all right, cool. It closed above 30.50, and if it closed one more candle above 30.50, I was going to take 30.50 because that's another small quarter, right? It ends, it's 25 points lower than 30.75. I wanted this yesterday and I missed it, and because by the time I saw this, it was like an hour or two later. This was at night. It was Father's Day. I was hanging out with family. I wasn't paying attention really to my phone, and we were just hanging out talking, and I just lost track of time. And I don't know if that's a good thing or a bad thing. I'll let the jury is still out on that one. And when I saw this, I was like, oh crap! Let me put in an order at 30.50. And again, I never actually got filled, right? So that's a recipe for me anyway to get a little bit of FOMO action building up. And I was like kind of pissed. Especially when I saw over the next, right before I went to bed, I saw that it was somewhere around here. It had completed that small quarter, and I was like, "That's 25 points. It's not monstrous, It's not like the 200-300 point drop that we had, or it's not like the how bad was it actually? I don't remember. Maybe I remember the S&P it dropped like more than that, 50, 75, 100 points or something, just a few weeks ago. If I were to let's see. I'm going way far back. Okay, so yeah, so big picture wise, it's still stuck in this giant range again. Okay, so if I were to change this, okay, sorry about that. Flip flopping all over these charts here. If we're looking at the daily chart, it's not nearly as bad as what it was a couple of weeks ago, right? With this nasty move down, and then it kept going down a little bit after it bounced off. See, this is just further evidence of why I like this kind of stuff. This initial this initial drop bounced off the 3,000, and then it bounced off of the 30.75, right, to come back down. And the next day, it had dropped all the way down to 29.25. right? So these are just the ATR here is just really big, so it's taking out 2 or 3 quarters at a time. But the pause areas or the reversal areas for the day anyway, for intraday trading, they were on these quarters, right? These psychological quarter numbers, right? 3075, 3000, 2925, and it's sliced through the quarters in between, but there's a reason. Part of the system is to have on a big number like a 3000, you go above and below 3 quarters because it's just part of the system. I'm not really going to get into that right now, but that's why I have those lines marked up. In between, you might see a lot more moves, just between 4 quarters, right, or like 100 points, right? You might see some pauses, and intraday, as you go to a lower time frame, you see a little bit more of that. And so that's kind of what I was shooting for yesterday. Yesterday we were at the 3050. We broke above it, and coulda, woulda, shoulda taken the 3050. I could have taken very, very little risk here, and I would have been totally fine on the first try. And I could have held it overnight until today, and I would have had what is that? More than 50 points, right? And that's really as much as you can ask for if you're day trading. You can just stack a couple of contracts there, or if you're actually doing the micros, the minis instead of a micro, then you could just add a 0. In which case, currently I would be sitting at $610. Or if I'm talking about the 50-point move, that would have been $2,500 in one day. And that's ultimately where I want to get to, but I want to get good at capturing these quarters and spotting when they come out. And I want to learn cheap, risking 50, 100 bucks at a time, so that when I get good, I can build up confidence to have 500, 1,000 bucks at a time, right? Just add a 0 to all that stuff. So that's the goal. That's a long-term goal, long-term plan. We're gonna ease up to it by adding. Right now, I'm just taking 1 contract at a time. When I get more confident and have a larger account size, I'll put in 2 contracts at a time, and then 3, and then 4, and then once I get to 10, I'm basically trading the minis instead of the micros here, right? Because minis are 10 times bigger than the micro. Anyway, that's it for today's video. It was a little bit of a day filled with FOMO and a lot of regret and feeling like I missed trades, and I shoulda, woulda, coulda done this. But I think that's part of the game, and I think that's where it really helps me to share this out loud and verbally on YouTube. Because it helps clear my head. It's kind of like a way that I can journal, and I definitely don't like looking at this too much, because I know that I only got in up here. Definitely missed out on like a nice 50, 60 point move, maybe 70 if I'm going to really push it, and I really want to torture myself. I'm like, oh my God, I coulda, woulda, shoulda taken it from all at the bottom down here. Why didn't I do that? I could really, really torture myself for a long time if I stay staring at this any longer. So so that's it for today's video on that front, and stay tuned for the next video from YouTube. While you're here, make sure to hit subscribe and hit the notification bell, and stay tuned tomorrow as I let you know how this trade wraps up. So see you tomorrow, everybody. Have a good night.